What's up everyone, this is Ryan here, the Crypto Grinder, and today I'll be talking about creating a portfolio. Now, when you create a portfolio, I think the most important thing is not just create a portfolio within cryptocurrencies, but you're looking at a basket of assets. Now, what do I mean? Okay, so I think everyone enjoys cryptocurrency trading and investing at this current juncture, but I think with the current market cap being range bound, so we're looking at anywhere from 89 billion to 115 billion, and you're having these pullbacks within your portfolio. Now, no one likes it when it's about 30% to 60% down. All right, so in order to take away that worry, the most important thing is to have a strategy in place. Now, what do I mean? If you are invested in long-term cryptocurrencies, say anywhere from Ethereum, Bitcoin, Litecoin, Ethereum Classic, NEM, Monero, fine. These are all probably the best bets that you can have at the moment. But however, I understand that there are investors who are coming in with smaller investment sizes. For example, you're looking at anywhere from $30 to about $100. And what I'm most concerned about is that it doesn't give the investor a chance to really buy these cryptocurrencies in whole quantities or whole units. So they will usually look for the small cap cryptos. So small cap cryptos are basically less than 1 cent, and they were probably packaged this way during the ICO so that it will appeal to the smaller investors. So what I find the most risky at the moment is that firstly, they lack liquidity. Also, they are usually in less than 3 exchanges. All right. So what are the risks involved here? When they are in only 1 or 2 exchanges, or basically less than 3, there is a likely chance that these exchanges may flip them very quickly. So meaning that after a while, when the volume dies down in these small cap cryptocurrencies, after a while, they will just get delisted. So maybe, for example, if you are a small investor testing out what this cryptocurrency market is all about, and you say lose that $100 that you invested, you may not feel as much of a pinch compared to someone who probably needs 1 whole month to earn $100 US, right? So that being said, I think the best practice is that if you know that you are in that kind of financial situation where you earn a very tight, you're basically earning this amount, okay, to invest in this market, and you want to participate, I really strongly suggest still going for the top 5 to even top 3, because that being said, even if you hold them for long term, and even though they have the short term volatility, especially with the BIP 148, whether there's going to be a user activated soft fork, and whether down the road there's going to be a user activated hard fork, as what I've just read, it should not matter that much, because you want to stay invested in the best cryptos possible. So coming in with very little is fine, because that's what cryptocurrencies are all about, right? You can buy fractions of a Bitcoin or fractions of any favorite cryptocurrency and still be able to participate. Now, another concern that I have is, of course, the pump and dump groups. Now, I think I've spoken about this before in my previous video, where I noticed that these pump and dump groups always want to attract the newcomers with high returns. And just so you know, these are all fabricated. Okay, it's very easy to create this kind of movement within the small caps. So when we mean small caps, I'm looking at below 10 million. So what happens is that these groups, right, are obviously working as a syndicate, and they definitely have a lot of marketers. I have a lot in my group, actually. There are quite a few that I notice. They will tend to talk about a particular small cap crypto, saying that you better get in now before it pops. You don't want to miss out on that pump. Stuff like that. I can't prevent it because my group is very large, so I can't always be around. But I do have moderators who are always on the lookout for such people. It's very obvious, because they will always talk about this particular crypto is going to go up. No substantiation whatsoever, no background, meaning that they don't provide articles or any kind of roadmaps for people to look at. So they will just plug themselves into groups, infiltrate these groups where we are trying to form a proper community where we want to value add and educate each other. But then these so-called pump marketers will come in and just say, hey, you better not miss out on this pump. Or when the pump is going on, they'll just show a chart that the crypto is already up 30-40%. So as a new investor or an investor coming in with very little money, you want to quickly jump on board because that $100 could be $130 in a matter of minutes to hours. Now, having this kind of mentality is gonna obviously get you, burned over and over and over again because you don't have the proper investor mindset. Okay, so what I've been doing is that I've been conducting private consultations for my clients. Now, when I say this, of course, naturally, it comes with a fee. It's very obvious because at the end of the day, I'm not here to sell internet marketing courses because this space is actually high risk, right? And if you don't know what you're talking about, all right, or you're not even qualified to advise, now, it can get very risky for the person that you're consulting. I think I had a very good question from Bruce Morton. He's one of my subscribers on the channel, and he mentioned, is it okay to say you are allowed to put 10% into a particular X crypto? Now, that's the tricky part because this is an unregulated market. At the moment, there are no certifications or regulations that anyone needs to have to provide advice in cryptocurrency markets. Now, the reason why I can even do private consultations or why I'm even so-called qualified to even give financial advice on a private basis is because I used to advise high net worth clients, right? So high net worth clients would usually come to the bank. We would be assigned a portfolio as a banker and we would advise them on how we do placements into financial derivatives. So we're looking at insurance products, we're looking at derivative products from forex to stocks, and also at the same time bonds, straight up equities, and even doing forex tradings, right? So I've already had that experience, and the cryptocurrency markets honestly are a high risk product. Immediately, it doesn't matter whether it's Bitcoin, Litecoin, or the top 3, top 5, or the bottom 100. The whole category is high risk, all right? Because it's very hard to say that it's low risk just because there's infrastructure. Due to the volatility from a day-to-day basis, we're looking at 20 to 30% swings possible. And of course, naturally, smaller cap stocks are having larger swings, anywhere from 40 to 50%. Take BCN, for example. Take Digibyte, for example, right? Those who are still holding know how low it is at the moment. So whenever you're in my Telegram group, right, you will notice that as much as I would like to engage, I notice that there are also a lot of people who are coming in from all walks of life, different kind of characteristics. Some are genuinely trying to help. Some are just basically trying to influence the group to do a lot of other things. So that being said, this is the way it is. It is still the Wild West in cryptocurrencies. And I just hope that when people invest, they are looking at investing, speculating with what they can afford to lose. And those who are looking at proper portfolio diversification should really seek, proper advice, and not just, listening to what people are buying or saying. Now, there are two types of advisors. Firstly, those who have financial advisory experience, such as myself. Of course, the other ones are those who do technical analysis, or at least they have a background in forex trading. I think, the former, which is people like myself, are still very new, as in the sense that there's not many private bankers or bankers who are willing to step into this space and provide financial advice. Because, like I said, it's unregulated, so it is risky. So I think the only people that actually provide this kind of advice probably is Tizen and Leon Fu, but they handle probably institutions at the moment, because to handle retail is really not easy, guys. It's not easy because why I even do it on a private level, and basically my clients pay me by the hour. I don't manage their funds, right? Because there are regulatory restrictions if I'm advising a US customer, for example. And at the same time also, this is a space where it's still very sensitive. There are a lot of gray areas. So I'm always very, very cautious about the way I market or even provide advice or give the levels, in my videos, because no one likes to give levels. I think of all the videos that I've seen, the levels are very specific on my videos, right? And people appreciate it when I get the call right, and of course people get upset when I don't get the call right. You see, so this is retail for you. Retail investors tend to be upset when things don't go their way, but they are very happy when it goes their way. Now, when you're a private investor, usually you already have a understanding of risk. Okay, we go through the financial needs analysis together, and you are mentally prepared for that swing. So if the call went wrong, okay, most investors will get it. They're not going to come and blame you and spam it on social media that Ryan made a mistake. So I'm very, very careful on the clients that I take in, because like I said, this is still the Wild Wild West, right? We're all basing it on alpha and beta releases. We're not basing it on proper products that you and I, the layman, can use. You see, I'm not a developer, guys. Okay? I am an advisor, right? And so far, whenever my clients have come on board, we've been structuring portfolios, meaning that they have anywhere from short, medium to long term. They're not here to build just what's the next big thing tomorrow, or what can be pumped 30% tomorrow. We don't discuss this kind of stuff. We're looking at the best fundamental technologies, but at the same time, we're looking on who's going to be hitting their roadmaps going forward 3 to 6 months to 12 to 24 months. It's very specific. Apart from that, we also look at hedging strategies. Now, why are hedging strategies so important? Say, for example, you had a great run last week on LTC. Okay, you got in on the call during the dip. That was maybe the past few days. You got in on the dip. Currently, LTC is about $44, $45. You made 15%. What do you do with that 15% profit? So you can either go to USD Tether, or if your position was large enough, you can actually buy some gold or silver. Okay, it doesn't matter. Now, why do I keep recommending gold and silver? Because we've really had a very good run in the stock markets as well. And, it's almost 10 years. It's only almost been 10 years since '08, the subprime financial crisis. And, there's so much money and liquidity in the market that we do not know which sector will cause that deleveraging or cause that toxic asset, right? And who will usually dump first? Usually it's the private banks, because the private banks will dump first because they see the trend. They know. So when they start dumping, right, we as the retail investors, we're always the last to know. We will get hit badly, and we won't know, we won't see it coming, guys, honestly speaking, okay? Because we are not having that information as fast enough to react. So all I can say is that in my sessions, I always cover prevention. Okay, I cover accumulation, and at the same time, I look at the fact that I look at a lot of hedging strategies. So this is not a video that I'm trying to advertise anything. I'm just trying to give you a perspective. Even if you don't engage me for private consultation, you know where I'm going at, in the sense that the direction. So it's most important that once you create a portfolio, even your portfolio is $1,000, you still could do exactly the same, because maybe you can't buy gold, okay, but you could always look at silver, okay, or you can look at going to fiat, back to fiat, or back into a currency that you're comfortable with, okay, and build some assets. Naturally, when your portfolio is larger, we can look at other things. All right. Say, for example, property is a very good example, right? Maybe in your country, property, the prices are not crazy at the moment. Maybe they are consolidating very well, and you can even have a good yield on rental. Giving you an example. All right. I'm sure there are other assets out there, and you want to build tangible assets as much as possible. Now, naturally, if tangible assets are very expensive, say, for example, property in Singapore is exorbitantly high, right? And the rental yields are not favorable. So I would never put my money currently in property at the moment until I see a very, very big dip in the property market. Then my money is in. You see? So for now, it's gold and silver for me. More gold than silver. I would still keep cash. I'm still very open to keeping the Sing dollars. And you know, it's your preference at the end of the day. So I hope that this video will give you a little bit of perspective about how a portfolio should be created. Yes, you can speculate on small caps, but bear in mind that small caps have the highest risk compared to the larger market caps, larger market cap cryptos. So that being said, thank you so much for watching, and also don't forget to comment, like, and subscribe to the channel. And at the same time, if you want to get more notifications or more videos from me, remember to click that bell so that you will receive the latest video from my series. Thanks so much, guys, and thanks for watching.